With so many industries failing and not paying back their loans, banks in India seem to have changed their strategy. They're giving out more personal loans, especially housing loans, which consequently reduces lending to industries. The staggering rate at which housing loans are increasing, especially by the private banks, has spooked the RBI. They've warned banks to be careful, so here's what's going on. Hello and welcome to another episode of The Data Point. Today we're taking a look at what types of loans banks in India are giving out and try to see if there's a reason to be a little cautious. To do this, we're looking at data from the Financial Stability Report published by the Reserve Bank of India. Now, what really sticks out in this report is the amount banks have been lending for personal loans. Personal loans include things like housing loans, vehicle loans, educational loans, and credit card payments, and are given to the everyday individual. In fact, when we look at the data as a whole, the share of personal loans given has crossed the share of loans given to industries in the past 2 years. By 2021, loans given to industries formed over 30% of the total loans, which is the highest share. But then, personal loans took over, hitting 33% of the total loans in 2023. Now, let's take a minute to understand what this all means. More loans are being given to workers over the industries who are paying their salaries or wages. If the employers are struggling to raise money, it begs the question, how will workers pay back their personal loans? Private banks are leading this personal loan spree. When we look at the data, we see that personal loans given by private banks have increased year on year by 17.8% in September 2021, by 18.8% in September 2022, and then by a whopping 52.6% in September 2023. A major jump. Compare that to loans given to industries. In the same period, loans to the industry sector increased by 8.6%, 14.2%, and 10.7% respectively. The increases are much lower than what we saw with personal loans. Now, there's nothing inherently wrong with giving out personal loans, but the increases in some components, like housing loans, are so high that the RBI has started noticing a worrying pattern. At the Monetary Policy Committee meeting in October of last year, RBI Governor Shaktikanta Das said
certain components of personal loans are, however, recording very high growth. These are being closely monitored by the Reserve Bank for any signs of incipient stress.
Now, why is the RBI worried? For this, we're going to look back at the 2008 global financial crisis. The 2008 financial crisis was caused essentially when the US banks issued housing loans to anyone who asked for it without proper checks or balances. This created a bubble with homeowners not being in a position to pay back their debts and no one willing to buy the house from them either. The result was banks collapsing, leading to a financial crisis. Now, the American financial system differs a lot from the Indian financial system, and there's no hint that the financial crisis that we saw then will happen now, or that it could even happen in India. Still, the crisis is an example of what can go wrong if institutions are left unchecked. Now, why are we talking about only housing loans and not all other personal loans? The RBI report shows us that within the personal loan umbrella, housing loans dominate the Indian market. By September 2023, half of all personal loans given by public banks were housing loans, which grew by 13.5% year on year in that month. When we look at private banks, 47.3% of personal loans were housing loans that grew by a staggering 87.4% year on year in September 2023. As a whole, 48.7% of all personal loans given by all banks were housing loans, growing by 40.7% year on year in September 2023, outpacing all other types of personal loan categories. This does not mean that India's housing market is in trouble or that the increase in personal loans is necessarily bad. The RBI is watching the banks' activity, and in a press conference after the October Monetary Policy Committee meeting, Mr. Das said,
"It is only to caution the banks to strengthen their internal surveillance systems, to watch the trends and take whatever measures are required."
In November, he reiterated that the housing and vehicle loan sector is not under stress. So even though we see this spike in housing loans, the gross non-performing assets ratio for housing loans was the lowest across all loan types. Now, gross NPA ratio is the share of loans which have turned bad because they've been overdue for over 90 days. So by September 2023, only 0.9% of all outstanding housing loans given by private banks had turned bad. That means 99% of customers who took out housing loans have been paying back their dues on time as of now. So the RBI's line of thinking is right. There isn't anything to worry about right now. But with things like this, right now might be the keyword. Thank you so much for watching this video. Make sure you are subscribed to The Hindu's YouTube channel so that you do not miss the next one.